Ladies and gentlemen, good afternoon. My name is Nick and greetings from Russia. We start our stream markets psychology, well, trading psychology, of course, and so we are going to look at, the most interesting things in trading psychology and today it's actually a really interesting topic. Well, as you know, so before we do this, so please let me know somehow in the charts that the sound is okay and the video is okay, so you can hear me, you can see me. Well, there are no technical problems, and well, that I can start showing you something. Okay. Well, I see that actually the chart is quite active. Well, that's great. That's great. hmm Okay, so if everything's okay, well, just let me know somehow in the charts, greet me somehow, just write something that there are no problems, yes? Well, okay, well, I hope that's well, okay, so I hope that everything is good, yeah? So just well, my micro is good. Okay, well, guys, as for today, we are going to discuss a very interesting bias. Yes, and actually, this bias is called like framing effects. Yeah. Well, speaking about framing effects, it is connected with martingale system. Yes. So somehow, well, as for me personally, I don't like martingale system. So I think that it can be really dangerous to use it. But well, anyway, so we're gonna discuss this bias. Well, as usual. So please, can you answer so the following question? Yes. So actually, have you ever tried to so when you lose money, when you lose a lot of money and well, all the time in all your trades, so have you tried to get your money back by the following trades? Yeah, so just so you trade according to your previous losses, yes, and so you remember the results and you try to get your money back. Yeah. Okay, well, that's great. So anybody else or not? Slow network. Well, okay, anybody else? Well, only two people are active actually. Okay. Uh-huh. Uh, may I ask you kindly to answer the following question then? Well, actually, this is a short test. So, guys, look, let's imagine that you get like $200. Yeah, so $200. So, what would you choose? So, option A, yes, option A. So, you get $50 more with 100% chance, yes, and option B, so you get $200 with 25% chance, or you lose nothing with 75% chance. Yeah, so you lose nothing with 75% chance. Okay, so just can you answer this question? So lose and don't get actually. Yeah, so just like this. Mm-hmm. Oh, okay, well, as usual, again, so guys, again, so you get $200, $200. So this is, so let's say so, a gift or or whatever. Yeah, so or whatever. Um, so question A, yeah, so question A. So what would you choose? Yeah, so to get like 50 dollars with 100% chance, yes, or like get $200 more, yes, so with 25% chance, or lose nothing with 75% chance. Okay, so what would you choose? Well, I see that the connection is bad. Well, that's actually not good. It's impossible to communicate in this case. Well, A, yes? Well, actually, well, speaking about the second question, yeah, guys. So, well, the second question is the following, yeah. So, well, in addition, you have been given $200 more. What would you choose? Yeah, so to lose $150 with 100% chance, or lose $200 with 75% chance, lose nothing with 25% chance. Okay, so just what is your choice? Well, in this case, well, yes. So Lil Steen answered yes. So $50 with 100%. Okay, so this is for the seconds. For the first question, yes. So the second question is that, well, B. So Masoon Khan, yes. So he answered that's B. Well, for sure. hmm Yeah, so this is called the framing effects. Yeah, so guys, and this is bias. Why so? Because look, the result is the same. So look, you get $200. So if you get $50 for sure, so your financial result is 2 and 50. Yeah, so $250. In the second task, yes, so you get $200 and you get $200 in addition. Yes, so more. It means that you've got $400 now. Yes, and in option A, you lose 150. Well, it means that your financial result is exactly the same as in the first task. Yes, so it's 250. So you still have a profit. Yes, and this profit is $50. And B, so B in the first task and B in the second task is the same. Yes, so actually the first task, yes, so and the second question, the answers are similar. Yes, so A equals A and B equals B. But people, well, as you can see now, yes, so people they choose different things. Yeah, so in task one, they choose A mostly because 100% chance. It means that you will get $50 for sure. Well, on the other hand, yes, so when you see that you have to lose something, yes, of course, you would like to risk. Well, a trading framing effects, guys. This is a cognitive bias in which people react to a particular choice in different ways. Yes, and it depends on how it is presented. Yes, so for example, a loss or a gain. So people tend to avoid risk when a positive frame is presented, but seek risks when a negative frame is presented. Yeah, so actually, for example, so speaking about martingale system. Yeah, so. Do you remember? So I asked you this question well in advance. Yeah. So well, are you trading just following your previous losses? Yeah. So here is like example from trading systems. So for example, um, martingale system. So it's the necessity. Well, sometimes people trade by using the necessity to get their money back. Yeah, so to get their money back. So they prefer to risk actually because they know that they lost money just maybe several minutes ago. Yeah, so something like that. Well, the same is true without any martingale. Yeah, so well, after several losses, for example, well, the trader starts risking more. Yeah, because he wants to get his money back. And this is a really big problem, yeah, because actually all your trades and so and all your trading systems, so you have to try to to there is such like a really good trait of character. It's like in trading, yeah. So it is called like to know how to forget about your previous losses, yeah. So something like that. So you have to start all your trades like without any like thoughts about your previous losses. So let's say so, and try to find entry points without such thoughts. Yeah. So well, I hope that this is clear. I hope that it is interesting for you. It is useful for you. Yeah. So framing effects. Yeah, a really interesting psychological bias. Okay. Okay. Using English with Polish accents. Nobody told me that. Nobody told me before that I've got a Polish accent. Actually, I'm Russian, yes, and my native English, oh, sorry, my native language is Russian language. So thank you very much. This is a really big surprise. Okay, guys. Well, do you have any questions? So, well, I would like to ask you, well, do you have any questions about that? Or maybe you have questions about something else. Well, maybe you would like to know more about like technical analysis or fundamental analysis, so we've got time to speak. Yeah, well, Masoon Carnival, yeah. Predetermined. You mean what? Um, Predetermined profits. Yeah, guys, well, any questions? Just any questions? Anything, not just psychology maybe, but something else too. Well, Masun Khan, well, can you just reformulate again? So, well, about the profit. So I cannot understand that. If I open, I was told that if I stay over, if I open a trade, I was told that if I stay over the initial opening trade value, I get a profit. Oh, well, you mean so this is the feature of the platform? Yeah, so well, as far as I understand you, yeah? Well, as for the platform, I cannot. Well, unfortunately, so here I'm not responsible for this, so I cannot answer. If I understand your question correctly, yeah, so just what's the best time interval to trade with? Yeah, so Lil Steen is writing is asking. Well, as for me personally, ladies and gentlemen, well, actually, of course, it's quite personal. Yeah, so but uh, look, well, European session, yes, and actually. Um, so let's say so the intersection, yes, so between European session and American session, yes. So actually, well, speaking about Moscow time, so Moscow time is GMT plus 3. Yeah, so it means well from approximately from 10, 11 o'clock till approximately 6, 7 o'clock. Yeah, so it's GMT plus 3. Yeah, so it's Moscow time. So I guess that this is the most interesting time to trade. Why so? Because all interesting events, yes, well, are being published, well, at this time. Also, the volatility is really high. Yeah, so everybody works. Yes, everybody is at work. Yes, so this time. Well, I mean, in Europe and in the United States. How can one have a good psychological pattern as a beginner to earn income and have little or no loss? Well, unfortunately, well, Denian, well, actually, losses, this is part of all these stuff. Yeah, so if you get losses, it's this is normal. Yeah, so let's say so um, you have to get used to it. Yeah, so well, actually, and you have to recognize that if you get losses, well, it means that you pay for your experience mostly. Yeah, so the question is how to earn more than to lose. Yeah, so and even more. So how to earn more, for example, than like the interest rates in your commercial banks. Yes, so because in commercial banks, so you can have an income without any risks. Yes, but uh, on trading, yes, on the platform or on the stock market, so you have to risk to get more. Yeah, so this is the only question. Well, unfortunately, well, speaking about losses, this is part of trading. Yeah, so that's for sure. I open a trade for $10 on currency and stay over. Okay, I get a predetermined profit on 82%. Well, yeah, well, look, well, well, again, so this is speaking about the platform. Well, unfortunately, I cannot. This is the question not for me. Well, it's not my responsibility. Okay, so just something else if you can. Sorry. Well, speaking about options and well, the difference between options and forex, guys. Yeah, so here is the difference with profit and with losses. Yeah, so well, on options you get a fixed income. Yeah, so like for example, like Masoon typed. Yeah, so like 80, 82%, well maybe 90%. Tech support team. So you can write to tech support team. Well, maybe on Facebook too. Yeah. Okay. Well, on options, yes, so actually the profit is fixed. Yes, well, on Forex, well, maybe you know, maybe you don't, but on Forex, well, it all depends on the distance. Yes, so for the price. Yes, so for example, if the price like for example went up like for 10 pips, yeah, so this is just one type of profits, yeah, so one sum of money. So if it's went up like for like 20 pips or like 50 pips, yeah, so you will get definitely more, for example, yeah, so the profit is not fixed. Yeah, so let's say so. I use 1 minute candlestick and 5 minutes interval to close the trades. Is there any best timing? Well, in my opinion, well, look, guys. Well, speaking about minutes, yes, and minute time frames. Well, I'm against minute time frames as well as against martingale. Why so? Because well, I think that 1 minute time frame and actually minutes time frame. So this is quite it's not specific actually, but it's quite close to some type of a casino, yes, because or gambling. So if you want, because well, technical analysis it does not work well, yeah. So you analyze so-called market noise, yes, well, on a 1 minute time frame. So be really careful with that. As for the logic, yeah, so the logic is correct, yeah. So if you choose, for example, like a time frame, so for example let it be like 1 minute, okay, so 1 hour, so well I prefer 1 hour time frame. So your expiration time it has to be like 3 or 4 times more, yeah, so like for 3 4 hours, maybe 5 hours, yeah. So why so? Because you have to give the price to move. Yeah, so you have to give the space for the price. So let's say so, because well, sometimes the price can return back for a while, yes, but after a while it can again start rising. Yeah, so that is why. So of course it takes some time. Yeah, so for the price to move. So I think well your logic is correct. As for the time frame, 1 minute, I'm against that. Sorry, forex is too risky. Well, as for options. It's the same, absolutely the same. Well, the less risk is on bonds and shares, yes, on the stock markets. Well, as for me personally, I trade on the stock markets, but well, the risk is uh, of course it's not so risky, but the profits, yes, it's not so big. Yeah, so this is the main points here. Mhm. Well, okay, guys. Okay, so it's time to finish, I guess. Yes, so to rounds off, so let's say so. Well, I hope that this stream was interesting to you and useful to you. So, regardless my Polish accent, and well, that was a joke, yeah. And well, I hope to see you all again. Yeah. So next time. Oh well, the last question. Okay. The best time frame is 1 hour candlestick to up to 5 hours closing time. Is that correct? Yes. Not maybe not five, maybe like 3 or 4 hours. Yeah, so something like that. So time frame 1 hour plus like the expiration time 3, 4 hours. Well, I guess this is better than 1 minute time frames. Yeah. So, but of course, I know that everybody wants to become rich like in several minutes. Well, usually it leads to losses and to disappointment. So let's say so. Um, Okay, well, that's nice. Well, okay, okay. Great, guys. Okay, so it's nice to again. So I hope that it was useful, yeah. And I hope to see you all again, well, but next week. Thank you very much for coming. And of course, though, if you like this video, so just please click like, yes, subscribe to our channel. Well, if you don't like, of course, just click I don't like and well, whatever. Thank you very much. Bye bye.